2020 has been a crazy year that investors will most likely not forget anytime soon. Earlier this year in March, fear regarding the pandemic attacking the entire globe set down the stock market to record lows. In fact, the S&P 500 alone lost 34% of its value in this time frame. And the even crazier thing is that if we fast forward to today, it seems as if the S&P 500 is now approaching an all-new time high. So what the heck is going on here? Some tech stocks even reported new time highs as of right now. The most craziest thing about all this that's going on right now with the stock market is that unemployment rate in the US alone is at an all-time high. A lot of weird things are going on right now, if you ask me. Now, although this rally that we've been experiencing over the past couple months could most likely be here to stay, there's a lot of legit reasons why we could be facing a stock market crash 2.0 going towards the end of 2020. And I personally think to some degree we will experience a market crash, and I think it's only a matter of time before our stocks will start to go into the red. So in this video, we're going to be focusing on the top 6 reasons on why I think that the stock market is going to crash again. My name is Robin, a Canadian investor, and if you guys enjoy this content or this video, be sure to give it a big thumbs up. If you guys want more Canadian-based investing videos, be sure to subscribe to the channel. Now, my first reason on why I think the stock market crash is going to happen is because news surrounding the pandemic is constantly changing on a daily basis. Now, as a seasoned investor like myself, and if you guys are one as well, you're probably thinking right now in your head that this is nothing new. This kind of happens all the time. But the problem is the pandemic, the news surrounding the pandemic is very powerful. In fact, we're facing as something that could potentially shut down the entire country again. So it's not just like the news articles and reporting stuff that's going on that's kind of causing people to panic sell. It's also the fact that the economy and businesses and everything across the board is really suffering as a result of this pandemic. And I don't generally believe everything on the news, and you probably shouldn't either, but right now we're going through something that's entirely different. Every week on the news there seems to be conflicting news reports on whether we're making some positive ground or we're just moving backwards and we're going to go into lockdown again once more. In my personal opinion, I do believe that we're doing pretty good, and I think going into the future we have a good handle on the situation, but at the same time we have to be careful. And I do think that if once we start to open up the country, a second wave will most likely happen to at least some degree. But again, nobody really knows for sure, as nobody can predict the markets. So when you guys are watching the news, if you guys are new investors and you see on the news that one week stocks are doing completely fine and you need to buy, and then the next week stocks are doomed, you need to sell, you kind of just need to tune it out and just keep doing what you're supposed to be doing, which is investing on a continuing basis. That's my main strategy for going further into this stock market crash. If it is likely to happen, I'm just going to keep buying down and keep buying stocks on a regular basis, because at the end of the day, that's the only thing you can really do. Now, in regards to the pandemic, I do believe that we're doing pretty good, and I do think going into the future, businesses, especially into the third and fourth quarter, businesses will start to see like some revenue increase because things are just starting to open it up, and that's really just the natural course of business, right? More people come in, you get more sales, but of course, the damage that's already been done is going to carry forward. So I think that things are going to be good, and I think that going into the future, businesses start to do a lot better. But if a lockdown does happen, it's going to hurt businesses quite a bit, and because of that, I think stocks are more likely going to dip to at least some degree. And this brings me to my next point, which I think is going to have a major effect on whether the stock market crashes, is whether or not a second wave actually does happen. And this poses an even bigger problem than the news, because if a second wave does happen, the government most likely will restrict things, they will shut things down, and this will set businesses even further back than they were at the start of this year. And we could see a market crash that's even bigger than what previously happened. This will depend, however, though, because it does seem like most countries seem to be doing a good job of handling the pandemic right now, but we never know. A second wave could come and that could just completely change everything. And hotspots seem to be popping up around the globe on a daily basis, depending on where you live. While the US and Canadian economies are starting to open, a second wave could really just throw a wrench in those plans. President Trump has said that if a second wave does come, he won't close the country down, or he won't shut down it like they did before, but this doesn't mean that they might restrict things. And at the end of the day, if there's enough pressure, the government will eventually have to cave in, and I think that most likely will happen. So regardless whether President Trump keeps his word on not shutting down the economy in the US for a second time, I think stocks are going, if a second wave does happen, I do think stocks are going to take a hit either way. And in regards to Canada, if the economy does, if the second wave does come, I do believe that the government will probably most likely shut things down. A third reason on why I think a stock market crash should come into the future is that although businesses are starting to recover, the hit that they took in the past is a lasting effect, and at the end of the day, businesses are recovering, but they're recovering in a very slowly, it's been a very slow process. But the good news at the end of the day is that at least the economy is starting to reopen. According to statistics, the retail industry has had an increase of 17% in sales for the month of May, but that doesn't really help very much if over the past 4 months, sales have slumped between 20 to 60% overall. As people get back to work, business will continue like it always does, but it's going to take us a long time to get to where we were before the pandemic happened. In fact, according to the US statistics, over 20 million people are still unemployed as of right now. To put that into more perspective, in March 2020 alone, only 1.5 million people were estimated to be unemployed. So as you can see, there's a lot of people still outside of work, and in order for business to get back to normal and for people to be spending money, putting money back into the economy, and the economy to grow overall, people need to get back to work, and that's going to be a slow process going into the future. If the US economy is to return back to business, it's going to be a slow process overall, and kind of in that process, companies are going to take a hit. In fact, a lot of companies have already taken a pretty big hit from everything that's been going on. And this, of course, leads to my fourth reason on why I think a stock market crash is likely to come into the future. And that is earnings going into the third and fourth quarter of 2020 will most likely going to be low. Earnings reports at the start of the year have already been pretty dismal, and things have already gotten pretty bad. And going towards the end of the year, I would imagine that most earning reports will probably continue to get worse, at least for the vast majority of companies. The Atlantic Federal Reserve is actually estimating or predicting a decline of almost up to 45% in domesticated product. And if you've been following the news already so far, other sectors like airlines and oil are already having a rough time, and they're having an even harder time than retail. In fact, airlines probably one of the sectors that are going to be hit the most regarding this pandemic, or if a stock market crash happens again. They're already sitting at a 90% loss of revenue over 2019. And you can bet that airlines are probably not going to open up and get the business that they had before anytime soon. In fact, it's probably going to take a couple years. So at the end of the day, a lot of sectors are going to get hit from this, and a lot of companies are going to have a hard time, and dividends are going to get cut. In fact, a lot of companies have already been cutting their dividends. Now, some companies have made major cuts into their dividends, while other companies have just made small little cuts here and there. And this, in my opinion, is why blue chip, aristocrat, solid dividend companies are probably like the best and the most safest companies to invest into right now, because if we do go into a stock market crash, we really don't know how long this next one's going to last. We don't know how long it's going to take to recover, and you want to be investing in companies that are going to survive and going to keep word on their dividends. This is going to be the safest way to invest going into the future, and probably going to be one of the best ways to do it, and what I recommend you guys do if you still want to invest, which you should, going into the next stock market crash. So at the end of the day, although the economy is recovering and earnings are slowly starting to get back up, this loss of income that happened at the first quarter at the start of the year is definitely going to hurt companies going into the future, and it's going to have a lasting effect. My fifth reason on why I think that the second stock market crash is likely to happen is that government aid and stimulus funding is starting to come to a close. Now, this is in regards to both Canada and the US. And all these aid programs were beneficial, and they did help a lot of countries out in regards to kind of like softening the blow and helping keep things afloat, such as allowing companies to stay in business and allowing them to pay their employees, allowing them to pay their rent. But after this funding ends, companies are only going to be able to do so much, and at the end of the day, somebody has to pay back all that money, and all that income that these companies have lost during the pandemic. That's going to hurt them. And think about the average person here. In the US, the average funding that people were getting was $600 a month. So if you cut off that $600 a month, all of a sudden everybody has a lot less money, and there's a lot less money going into the economy. This is why I think that once that funding gets cut off, especially in the US alone, this is going to have a drastic effect on the economy. You know, people are just going to have less money. They're not going to be able to pay their bills. They're going to be taking out less loans. There's going to be less business going around overall. And I do believe that once this funding gets cut off, it's really going to hurt the economy overall in the long run. And of course, with less money going around, there's going to be more defaults on mortgages, more defaults on car payments, and loan delinquencies across the board are going to rise. And this is not a good thing. And this unfortunately makes sense because people will just simply not have the cash flow to pay for all the debt that they've unfortunately managed to accumulate over the past couple years. I also predict that rental defaults will most likely increase in North America towards the end of 2020 and even going further over the next couple years. An interesting survey from Apartments actually found that over 30% of Americans alone missed their rent payments in June. This obviously is not a really good sign. Delinquency rates and people unable to pay their debt will most likely soar after the government cuts off that aid. Now, although it's completely possible that the stock market could soar even higher and continue to grow over the next couple years, once again, I just want to mention that no one can really predict what's going to happen in the stock market. The best we can do is to look at all the factors and make the best educated guess that we can. And because of this, I'm simply going to invest my money as I always have on this channel. And I do this by picking solid companies that have a track record of performing well, increasing in value, and growing their dividends in the long run. You want to invest in stocks that not only do well in times of prosperity, but also do well and can survive during times of struggle. And at the end of the day, I do honestly think that the stock market will dip to at least some degree. We might not get a crash like we did at the start of the year, but I do think the stock market will most likely dip. Because looking at all these different factors, like some of the ones that I mentioned in this video, it only makes sense. But then again, once again, nobody can predict what's going to happen. So I hope you guys enjoyed this video. Please let me know what you guys think is going to happen with the stock market going in the future in the comments of this video. If you guys enjoyed this video, please give it a big thumbs up. And thanks for joining me today, guys. I hope you guys enjoyed this video. Take care, and I'll see you guys later.